focus on the advisory now and try to answer the question about the first home guarantee. We know that that's coming in on October the 1st. So how is this going to flow on to property investors? Kitty Parker from Kitty and Miles joins us now to discuss. Kitty, nice to see you on this Friday. Cheers to you.
Cheers.
Nice of you to have a Pinot and join us for a bit of a chat and a wine. Okay, could you just outline what the changes are for those who might not be across the detail?
Of course. Now, the first home guarantee has been around for some time, but the Labor government has decided to implement some changes that are coming into effect on the 1st of October. And notably what these changes are they're reducing the income cap that has existed thus far, which means first home buyers, no matter how much you earn, you are now entitled to the first home guarantee. So that's probably the biggest change that's coming in notably. And the government has also reduced the caps on the number of people that can apply for the first home guarantee. So now if you're a first home buyer, you don't have to race in and try and become one of the first 10,000 or 20,000. You can just apply and automatically receive the first home guarantee.
So a 5% deposit, before we get to the SMSF piece,
Yep.
What do you think this is going to do to demand and to property prices?
Great question. Everyone is, and this is really across the board, the research has shown and everyone is saying, look, this is going to put a much toughest squeeze on already a tough first home buyer market, because when you allow more first home buyers to enter the market, but you don't counter that by adding in more stock, so higher stock levels, there's just going to be further buyer competition, and it's already pretty tight at the moment. So the result will likely be property prices go up.
Yeah, doesn't really help the solution.
No, but that's a whole nother conversation, isn't it? Okay, so what happens in terms of property investors? Because presumably this guarantee does not extend to those who are rent vesting, which a lot of younger people, actually just a lot of people, are having to do now.
Yep, so true. And I think this is a point that people haven't really considered. And where I'd been really thinking about this is thinking of self-managed super fund property investors. And when you invest as a self-managed super fund property investor, you have certain financial parameters to meet. And that's because of the tax implications, everything to do with being a property investor in a self-managed super fund. Now, the key dynamic that you want to meet is you need a good rental yield, because you want to cash flow positive when you're buying in a super fund. And if we look at the first home guarantee and how that's going to push up property prices, what we're likely going to experience is a contraction of rental yields, because the weekly rental rates will not go up as fast as property prices. So the flow-on effect is for any property investor, especially the ones that are looking at the low to medium pricing tier, what we're going to be seeing is subdued rental yields. And this in particular will affect property investors that are wanting to buy property in their self-managed super fund, because traditionally they really need quite a buffered rental yield to compensate for their loans, etc., because usually their interest rate is higher than that of a personal residential investor.
Is that sort of what the government's trying to achieve, though, so we don't have so many speculative investors in the market?
I don't actually think they've thought through that ripple effect. I think it's been, ironically, quite as simple as, gee, we'll just allow more first home buyers entry to the market, but they haven't actually tackled the question of, where are these new homes coming from? Where are all these first home buyers going to buy? And I think there'll be quite a substantial flow-on effect to the investor market, and in particular, the self-managed super fund market.
Yeah, you know that famous quote, it's the economy stupid? Well, you're going to say it's supply stupid.
Yeah.
It's this, we've got just a supply crisis in this country. Okay, so if we start to see those rental yields squeezed, impacting those who are holding property in their SMSF or would like to do so, what should they be doing now? Is it as simple as just getting advice, or they've got to sell? What do they do?
I think one of the key flow-ons that we'll start seeing is that these investors will likely need to input a higher deposit for their purchase to help counter the depressed rental yield. So again, traditionally, they may have considered placing a 30% deposit down when they're a self-managed super fund purchaser. But I think we'll be seeing more of these investors putting down 40 and 50% deposits to help counter their cash flow situation, because they'll likely achieve a lower rental yield. So I actually think, rather than deterring, as you touched on, rather than deterring investors, I think they'll try and think of novel ways to still enter the market, because after all, buying property in a self-managed super fund, the taxation incentives are great. And I don't think these folks will just decide not to purchase in a self-managed super fund.
So we are getting close to October 1. As a buyer's agent, Kitty, are you expecting huge demand, or are we overstretching this, that, you know, just because this has been allowed to happen, maybe not every young person wants to or can afford still to buy into the market?
Great question. I actually think we'll see, and it's typically the case when the RBA slashes the cash rate, or when interest rates decline, we usually see a few more buyers come into the market. I actually think this will bring a new cohort of buyers into the market. The market is already ridiculously squeezed, and especially at the first home buyer level. So we'll say anything under around 1.5 million and below, there is a severe shortage of stock at the moment. So prices have already surged even since the start of the spring market, say end of August, beginning of September. There's been comfortably, I would say on the ground, I've seen at least a 5% lift in, say, 5 weeks.
Oh, gosh.
It's substantial.
Makes me feel sick to my stomach. I don't know if you'll know this, but it seems to me, I mean, is the rental market getting tighter as well?
The rental market got really constricted for quite a while post-COVID. It has somewhat softened a little bit, but it certainly didn't go back to how it was.
No.
So the rental market is still relatively strong compared to pre-COVID days.
I've just got like a little story on that, because two friends of mine in the same area that I'm in Sydney have had to move because their apartments are being sold. And they've gone to look at properties that, you know, even a year ago would have gone on the day, that are still there being advertised a week or two later, because I think the landlords are asking too much almost. And, you know, for the properties where they don't have air conditioning and all these other things that people want if they're paying a premium.
Yeah, well, I asked cheekily for myself, because I was looking at rental properties say a month ago, 2 months ago, around where I live, and there was tons. And lately I've been looking and there's not that many. So I don't know what the dynamic is, if it's coming into summer, you know, I don't know.
That is correct.
Yeah.
It's the market. It tends to be the case that in winter, if you want to snap up a good rental, snap it up in winter, and you probably can negotiate a little bit more on the weekly rental price. Especially in Sydney, as we move into spring and summer, it gets a little bit tougher, and it's just the climate here in Sydney. You know, people come in and everyone just, spring comes along, the property market, the rental market seems to take off.